PepsiCo is an interesting company for investors to follow, and not just for dividend stock investors or investors looking for defensive stocks. PepsiCo is an interesting stock to follow for all investors because of the information the company provides about the consumer, the health of the consumer, where consumer trends are going, how consumer behavior is reacting to higher prices, etc. So in this video, I'm going to review and evaluate the latest developments at Pepsi and try and get a broader understanding of the health of the consumer and what's going on with PepsiCo stock specifically. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so in prepared remarks by management on October 8th, 2024, PepsiCo chairman and CFO provided some interesting commentary about the latest business trends. Specifically, in the third quarter, 1.3% organic revenue growth for Pepsi, but that comes following 8.8% organic revenue growth in the third quarter of 2023, which followed significant growth in 2022 and even more significant growth in 2021. PepsiCo was a prime beneficiary of stay-at-home trends during the pandemic because the company sells snacks and beverages that are consumed primarily at home. PepsiCo is different from Coca-Cola in that way, where it benefits from stay-at-home trends because it has a smaller market share in channels away from home, like restaurants, movie theaters, theme parks, etc., where Coca-Cola has a significant advantage. PepsiCo also had a recent recall in the Quaker Foods segment, and it's continuing to recover from the adverse impacts of that recall, and that detracted approximately 50 basis points from their total organic revenue growth in the third quarter. So if you excluded the impacts of the product recall from the Quaker Foods segment, PepsiCo would have had 50 basis points or half a percentage point more revenue growth in Q3. They go on to say their international business delivered 4% organic revenue growth, and that compared to 12% organic growth in the same quarter last year. So the international business doing much better than the North American business for PepsiCo, which is a little bit surprising to hear, given that the US economy is outperforming many developed economies worldwide. PepsiCo also expanded their gross profit margin by 110 basis points and 75 basis points for the operating profit margin compared to the same quarter last year. PepsiCo's finding many ways to lower cost, improve efficiency and productivity now that they're getting an understanding of how the business is right now following the unprecedented changes from the pandemic, right? There was 2 unprecedented impacts to PepsiCo as a result of the pandemic. First, they experienced a jolt in consumer demand and their revenue surged because consumer demand exploded higher. Then, when economic reopening got underway, they experienced a pullback as consumers chose to spend more time and money away from home. So now the company has to evaluate the current state of business operations following those 2 unprecedented changes. And that's not an easy thing to do for a company like Pepsi, which for decades has operated at pretty much stable conditions where revenue doesn't go up or down by all that much in a given year. And so for a management team to adapt to these big changes when they were used to decades of relatively stable operations is not an easy thing to do. And I give PepsiCo management kudos for doing a good job in dealing with these changes in operations. They handled them relatively well. And I like PepsiCo's strategy here. They know what they're good at. They're saying this is what they're going to do. They're going to offer great tasting products that offer variety, convenience, and affordability. That's their core competency, and that's what they're going to continue focusing on, delivering more great tasting products in more variety, right? In bigger packages, in smaller packages, in different taste combinations, in different areas, in different segments. And then they're going to offer you convenience. They're going to offer these products in vending machines, in grocery stores, on Amazon, in the university that you might be going to. They're going to have these products available in as many locations, in as close to the consumer as possible, to make it as easy as possible for the consumer to take one of their products, open them up and start eating, or open them up and start drinking. And then finally, of course, affordability. You can't reach consumers in this segment without having affordability. That's the key driver for demand of these products, is you get a quick snack or a quick beverage at a relatively affordable price. And that last part has been the most troubled for PepsiCo. Is this last 2 or 3 years, they've really increased prices on their product portfolio. And out of these three, the affordability has been the most difficult challenge for PepsiCo in the last couple of years. The performance this year in 2024 hasn't gone as well as expected, but the company has been able to increase profitability despite lower than expected sales because of productivity improvements. So given their pipeline of productivity initiatives and focus on profitable growth, they continue to expect to deliver at least 8% earnings per share growth in 2024, even though revenue growth is going to be in the low single digits. Maybe 2% is what the company is expecting in revenue growth, but they're expecting to deliver 8% in earnings per share growth, which is pretty good for Pepsi. This company is not going to grow revenue in the double digits unless there is like an unprecedented situation like the pandemic. This is a very slow growing company in terms of revenue. And then they hope to increase profitability through these initiatives, through being better at serving customers, through unique and creative ways of serving customers. You've heard of shrinkflation, right? Chips bag used to be full all the way to the top, and now it's like this much full, and the bag is like this big. Even my son is commenting on this, saying, "What's going on? Why do they give you a bag that's this big and it's only full like up to this much?" So those are some of the creative ways Pepsi is increasing profitability, even though sales are not improving. And then another area that PepsiCo is benefiting from in improving profitability, even though sales are not improving, are technology enhancements. You've heard a lot about automation and robotics used in warehouses. Companies like Symbotic, which is an AI stock I recently recommended as a buy. These companies are improving warehouse operations, allowing companies like PepsiCo to operate the back end of the business more effectively, more efficiently. Every employee is now more productive because they are assisted with robotics and technology that allows a warehouse to operate where before they needed 200 people or 500 people in a warehouse. They can now operate that warehouse with 450 people or maybe 400 people. And these improvements continue to get better and better and better. And as wages are increasing, companies like Pepsi are increasing their investments in these technologies because it makes more sense. The higher wages increase, the more it makes sense for companies like PepsiCo to invest in robotics and automation technology, because they're replacing that with high-earning employees that are now in short supply. So these are several of the benefits PepsiCo is experiencing and capitalizing on to drive profit growth in an environment of slower revenue growth. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.